Good afternoon, ladies and gentlemen. It is my great pleasure to introduce our distinguished speaker for today, Mr. Hatem Zegnani. With a wealth of expertise in the field of data science and machine learning, Mr. Zegnani brings a unique field, a blend of skills that extends across various domains, including finance, business intelligence, analytics, and supply chain. Today, Mr. Zegnani will be our keynote speaker at Seminars, delving into the fascinating realms of AI-powered trading, exploring its applications in the stock market, forex, and cryptocurrency. So without further ado, let us warmly welcome Mr. Hatem Zegnani.
Hello everyone. So today I'm speaking in front of you. I do estimate 200, 300 smart minds. So please forgive me if I feel not well at the stage. Today we'll be talking about Pickup Almas Finance, our product. So our product is about automating the execution of trades on stock market, forex, and crypto exchange. So what's the problem? The problem is that today we have limited access to sophisticated trading strategies. Each one who trades on stock market, on forex, on crypto, he trades, and there are other traders. Then who wins? Who wins is the one who have access to the most sophisticated trading strategies, and who has access to real-time data. So the challenge can be divided into access to real-time data and access to sophisticated trading strategies, which can be translated into the power of money. So our solution is about automating the trading decisions, reducing costs, and the easy access to powerful trading strategies. So the market is estimated to be around 130 billion contracts in 2023, with the growth rate of 64%. Our target audience will be the retail investors, financial institutions, and hedge funds in Canada and Europe. Our solution, how it works. So we are building a cloud-deployed solution to automate the execution of trades. Our system is a Dockerized system, so we have many Dockers. I don't know who from you is from IT background that raises his hand.
IT background. No one?
No one IT background? Who is from finance background? Who is from Esprit School of Business? Okay. Let's not dig deeper into technicalities. So our solution, you want to invest in stock market. You came to us, you give us the power to manage your investment, and we invest on your behalf. Our system executes trades on daily basis, and you receive a notification whenever a trade has been closed with take profit, with stop loss, with wins or loss. Is this clear to everyone? Okay, nice. So our revenue model, it's a subscription-based revenue model. Whenever you wins, we take 20% from your profit. Whenever you lose, we are not your partner in losing money, but we give you a guarantee of losing no more than minus 10%. Our competitors currently, we have many competitors. We have Algo Trading Systems, Strike, Alpaca, AlgoBall, Sensible. Those are US and Canada competitors, but our solution differs from those competitors because we are reducing cost, we are leveraging the smartness of Tunisian minds. So our vision is to empower retail users with deep learning tools and unmatched performance. And our roadmap, Now let's talk a little bit more technical, a little bit more finance. So in trading or in stock exchange, the risk can be divided into two subcategories of risk. There is the systematic risk and there is the idiosyncratic risk. So the systematic risk is related to the whole economy. Whenever there is corona, each one is down. Whenever there is a recession, each one is down. Whenever there is war, each one is down. So this is the systematic risk. And there is also another kind of risk, which is the idiosyncratic risk, which is related to a company, to Apple, to Microsoft, to Google. So there is two kinds of risk. As to reduce the risk, and by risk I mean volatility in stock exchange. As to reduce the risk, we only trade on contract for difference. Who knows the meaning of contract for difference? No one? Okay. So we'll be explaining what's a contract for difference. So, if we are to trade on the New York Stock Exchange, you invested $1,000 in Apple. And after 1 year, you made a profit of plus 8%. Who thinks that 8% is good? Raise his hand.
Raise your hands if you think
Who
so.
thinks that 8% is not good? Okay. So how to decide? How really to decide that this profit is good or not? We need a benchmark. Who says compare? Yes, we need a benchmark. So what is a benchmark for a stock exchange? A benchmark for a stock exchange is an index. There are many indices in the world. In Tunisia here we have the TIN index. An index is the average of the most sought after companies or most traded companies or bigger companies in market cap. So in the New York Exchange, there is the Dow index, the Dow Jones index. We call it also the US 30. Sorry? We call it the US 30. So the Dow Jones index or the US 30 is the average price of top 30 companies traded in USA. Is this clear for everyone? Another index is the Nasdaq. We call it also the US 100. Another index is the Standard & Poor's. We call it also the US 500. So there are many indices, and each trader, each investor decides to use an index as his benchmark. So if my investment have made plus 8%, and at the same time period, the Dow Jones have made plus 7%, then I'm good. I'm better than the index. Is this clear? Another benchmark that we can use is the inflation rate. Another benchmark that we can use is the money lending rate, like say around in Switzerland, in Tunisia we call it TMM, le taux de marché monétaire. Who knows TMM? So those are indices. or those are benchmarks. So whenever I've made plus 8%, I look at the index. If I make better than the index, then I have a positive alpha. Who knows what does mean alpha? Alpha is doing better than the benchmark. Let me explain a little further. So, suppose here that I have the index, and here I have Apple. I will plot in this figure the month-over-month return of Apple versus Dow Jones, say for 5 years. So 5 years, I have 60 points. So at the first month, Dow have made 7%, I've made 8. When Dow, in another month, have made 10%, I've made 12. So I draw many points. Sometimes the stock is negative. So here I have many points for a month-over-month return on investment. And then I'll plot a line. So this line represents the very linear, simplistic model for the return of Apple versus Dow Jones. Is this clear to everyone? And like each linear line, we can model it like this. So I say Apple equal beta Dow plus alpha. So what's beta, what's alpha? Beta is the coefficient by which I will fluctuate whenever Dow fluctuates. So if beta is 1, whenever Dow plus 1%, I'm plus 1%. If beta is 0, I no more related to Dow Jones. Is this clear? Okay. So what's alpha? Alpha is the surplus. So alpha, whenever there is a fluctuation in Dow Jones or there is no fluctuation, I'm always plus 2% or plus 3%. So in our job, we are seeking alpha. In our job, we are always looking for positive alpha. But for some companies, beta is very important. So beta is mainly important for insurance companies. Why? Because whenever you give your money to your insurance company, you will need your money back when there is a recession, when there is a big problem in the economy, when you lose customers. But suppose I'm an insurance company. Each one of you gave me $1,000 to protect himself from whatever happens in the economy. So I collected $300,000. What will I do with this money? I will invest it in the stock market. So in Tunisia, they don't do this. In Tunisia, they invest only in real estate and government-issued bonds. This is another story. So in USA, I will invest this money in the stock exchange. So this is the stock exchange. This is March 2020. What happens in March 2020? Corona. So in March 2020 is the impact of Corona on stock exchange. So Corona started, I think, December 2019. So in March 2020, the index, whatever index you chose, have made minus 30%. So minus 30%, then my investment has lost in 1 week 30% from its value. And I have my customers coming to me, hey, I need your money, Hatem. What will I say? So I invested your money, I lost your money, I cannot cover you back. So what's the solution? Who thinks that putting money in the stock exchange is good for insurance companies? Why? Okay, because there is a lot of fluctuations, a lot of volatility. The other scenario is to put the money in the treasury bonds issued by the country. So suppose, so this is scenario one. This is scenario one. Scenario two, I will go and put all the money in bonds. In bonds, the value remains stable. There is no fluctuation, but there is a drawback in bonds. Who knows what's the drawback of bonds? So, whenever you invest in bonds, your money or your investment is no more liquid. You cannot at any time sell those bonds. A bond is defined by a maturity date, so you should wait 5 years for the bond to be mature to get your money back. Whenever I buy a bond of 1,000 dinar from the Tunisian government, I should wait 5 years before I get back my money. So with bonds, there is no liquidity. Then, what should we do? As an insurance company, I've collected a lot of money. I will not put the money in the bank simply getting 3 or 4% per year. I want to compensate against inflation. What should we do, guys?
Yes.
Yes, please? Where to invest? Where? The stock market, there is a lot of fluctuation. Crypto, even more fluctuations. Gold, I heard gold. Gold is good, but gold fluctuates inverse proportionally to the stock exchange. So it's the same. But what if we invest in the stock market and we get rid of fluctuations? Just think about it. Your money is liquid, is available whenever you need it, but you get rid of those fluctuations. Is this possible? Is this possible to invest in this highly volatile stock exchange without? Who says no? Why? You just said no. Okay. So here comes our value proposition for institutional investors, for insurance companies. Our value proposition is to build a smart portfolio who is not correlated to the stock exchange. How? I'll explain to you how. Who knows what happens to Silicon Valley Bank? Why? Who knows why the Silicon Valley Bank collapsed? Random banks. So Silicon Valley went public and says, I want to respond. So people heard this. Oh, the bank doesn't have money. I'll go get my money back. This phenomenon, we call it run on banks. But Silicon Valley have a lot of money. The money is invested in treasury bonds. It's not liquid. So the same problem of insurance companies. If we go back to alpha and beta, we have here Apple, a lot of points, my line, and Y equal beta Apple times Dow Jones plus alpha Apple. Another product, which is gold. Let's put gold. I have gold. The benchmark always is the index, the Dow Jones or S&P 500, whatever you may. And I have something like this. A lot of point, and I have Y gold equal beta gold times Dow plus alpha gold. What if I invest 50% here and 50% here? What happens? So my Y portfolio is beta Apple plus beta gold times Dow plus plus plus. So this is the final beta. Don't you see here that beta gold is negative? So the return on investment or the month-on-month return is negatively correlated with the index. So if I manage to have a smart portfolio, this +2 and this -2, then I have a beta 0. This is what we call a beta neutral strategy. What does it mean, a beta 0? Having a portfolio with beta 0 is having an investment like this. So this is the Dow Jones, and my investment do like this. It's almost zero correlated with the stock exchange. And this is our product. Who have a question here, please? Who have a question here, please? Who don't understand the idea of the smart portfolio? Yes.
Investing in real estate is calculable when you put your stocks in real estate.
Okay. Suppose you have a land worth 1 million dinars. How much time does it take you to sell it in practice? Can you sell it in 1 day, in 1 month? It's not liquid. So we are building equilibrium between liquidity and return with less volatility. It's not liquid. Real estate is not liquid. You cannot sell it at once. Who doesn't understand this? We're good? Okay, so this is our product for retail investors, but the solution, when I'm now 8 a.m. in the morning and I want to make a decision on what investment product should I use for my portfolio. So how we decide? I can compute the beta of yesterday. I can compute the beta of last month, last year. But I don't know the beta of today. So now it's 8 a.m. in the morning. So how we decide? What we do is to forecast not the instrument, but we do forecast beta. So I do the math. I have historical prices of last 4 or 5 years hourly data. And I have here beta upper, and this is time. So I have here beta. Today, 8 a.m. in the morning, I do run my statistical forecast model, time series model, regression model, the deep reinforcement learning model, an LSTM model, whatever model. And I do forecast the next point. For each instrument, I do forecast the next beta point, and then I do run a mathematical optimizer to make beta 0 with a combination of 3, 4, 5 instruments. This is the trick. So currently we are in phase 0. We just finished phase 0, backtesting and doing all of this math. Phase 1 is the forward testing. Currently we are in phase 1 forward testing. We start trade with real market conditions, but effective money. And next phase is to launch on the Canadian market. So founders, we have me and Madame Carter, she's not present today. Thank you for being here. Thank you for your time.
Thank you, Mr. Hatem, for this wonderful presentation. Does anyone have any questions?
Everything is clear. No questions. No wonders. No meditations. Yes. Please.
Thank you, Mr.
Welcome.
Just a question for our youth and for who wants to invest, whether in crypto or forex in Tunisia. How would you advise him to do, despite the problems in Tunisia, because we cannot pay internationally, whether or by PayPal or.
Okay. I'll tell you. So, Madam, do we have anyone here from the government, from the police? No? No? Okay. Long story short, how to open international bank account with when respecting the laws. So what should every one of you do to open an international bank account? You open a foreign company. That's it. You go, I'll show you. Oh. You go to First Formations. It's a UK registered company. You go to packages. And then you go to non-resident package. So the non-resident package will cost you around 130 pounds. You multiply by 4, it's around 600 dinars, and they do all the rest for you. Then you have UK registered company, you have a bank account, you have a Wise card, you have a Pioneer card, and then you can invest. Simple. Let me show you another thing more important than this. Oui, c'est sécurisé. Who says about security? Oui, c'est officiel, c'est sécurisé. But before putting your money, you should start playing with virtual money. So play at least 6 months, 1 year with virtual money. You understand the patterns, you understand the trends, you focus on 1 or 2 products, you deeply understand them, and then put your money. Because statistically speaking, between 60 and 70% of retail investors do lose their money. I'll show you why. 1 minute. Madam, do you still have time? 5 minutes? Yes? Okay. Yes. Okay, so as to make it quick, because there are other presenters after me. So you go to this platform, you create an account, and then at the bottom right, you switch to virtual. When you switch to virtual, they offer you $100,000. You start playing with this money. Just you need to understand the phenomenon of leverage. Whenever you invest with leverage too, you are multiplying the reward and multiplying the risk or the probability of losing money. Just understand this. And I advise you all to start using this platform. And by the way, so how to say it? This is an Israeli platform. They are leaders. They are leaders, yes. This is the truth. Yes. Okay. I've been happy to be with you today. Thank you all.
بعد بساعة هذا صحيح شو